Dana Sparks, broker of Maximum One Greater Atlanta Realtors, and this week's contract tip is called Loan Denial Letter Fails. So, regarding a buyer terminating under the financing contingency of a contract, whether they are making a contract subject to financing contingency for a conventional loan, an FHA, or a VA loan. Basically, the buyer must terminate based on that contingency, prior to the agreed upon negotiated time frame in the contract that the buyer and the seller agree to for the finance contingency. So basically, in the contract, you're going to fill out the financing contingency, and the buyer and the seller negotiate a number of days from the binding agreement date that the buyer has to determine from their lender, is their lender going to give them the loan? After that time frame, the contract is no longer subject to financing. So if a buyer is going to terminate within that financing contingency time frame, then they have to do so prior to the end of that time frame, and they have to prove it. They have to send a loan denial letter. Now, we've discussed this in previous videos, so please browse through the channel to look for all kinds of videos on financing contingency exhibits and everything that goes along with those. But wanted to share with y'all today a couple of loan denial letter fails, as I like to call them. So basically, buyer must terminate prior to that time frame, and buyer must prove it. They must prove it by sending a loan denial letter from the lender. Now, in the GAR contract, it says the buyer must terminate prior to the end of that time frame, and then they have 7 days thereafter to send the loan denial letter. In the RE contract, they must send that loan denial letter simultaneously with the notice to terminate. Now, in the contracts, it specifically states that the loan denial letter must not, two things. In the GAR contract, there is a place for the buyer and the seller to agree upon a quote-unquote approved mortgage lender. So that's one thing. Secondly, it clearly states that the buyer may apply for a different loan. A loan denial letter, as the term is defined below, must be for the loan described above. The buyer may also apply for a different loan other than the one described above. However, the denial of such other loans shall not be the basis for the buyer to terminate this agreement. So, when you fill out a loan contingency exhibit, you must fill in the specifics regarding that loan. In other words, the loan amount, and typically that's a percentage of the purchase price, the number of years, and the interest rate. And then if it's a fixed or adjustable, and if it's from an institutional lender. So again, the loan contingency doesn't mean that's the loan the buyer has to get to purchase the house. It just means if they're going to terminate based on that, they must terminate based on that loan as described and agreed upon between the buyer and the seller in the financing contingency exhibit. So in the GAR form, not only, well, that's in both GAR and REs. The loan denial must be denied for that loan as described in the contingency. In the GAR form, because the buyer and the seller do agree upon a quote-unquote approved mortgage lender, the denial letter must be from that approved mortgage lender. And then in both sets of contracts, it says that loan denial letter must not be based on certain things. So it says the loan denial letter shall not be, the buyer cannot terminate and be protected if the loan denial letter may not be based on any of the following. Buyer lacking sufficient funds other than the amount of loan to close. That's A. B, buyer not having leased or sold other real property unless that contingency is expressly provided for in the contract between the buyer and the seller. For example, unless the contract also included an exhibit and making it subject to the buyer having to sell or lease their existing property. And C, buyer not having provided the lender in a timely fashion with all information required by the lender, including but not limited to loan documentation, official wood infestation reports, structural letters, well tests, septic letters, so forth and so on. Basically, and then it says the buyer may terminate this agreement without penalty based on inability to obtain a loan only if the buyer fulfills all of the applicable requirements as set forth, which I just read to you. Now, So here are some samples of some loan denial letters that did not protect the buyer. The buyer was not able to meet the financing contingency based on these loan denial letters. So here is one that came across, and the sale price, the agreed upon sale price, was $170,000. They were getting an FHA loan for 96.5% of the sale price, which 96.5% of the sale price of 170. The loan denial letter, however, has them it does reference FHA, 30-year FHA loan with the identified interest rate, but it does have a loan amount that they were denied for of $171,825. So $171,825 loan amount is way more than 96.5% of the sale price of $170,000. 96.5% in and of itself is $164,050. And then even when you roll in the mortgage insurance premium that an FHA buyer typically does finance into their loan, that is still way less than the loan amount they got denied for, which was $171,825. So that was the loan amount that was referenced, and the reason was inadequate collateral, unacceptable property. So that one did not satisfy the loan contingency for that buyer. So unfortunately, the buyer did default on that contract. That's loan denial letter fail number one. Here's loan denial letter fail number two. The initial loan denial letter, now these buyers did terminate within the time frame, but it's the loan denial letters that did not support that all the terms that the buyer and the seller had agreed upon in the contract. So here's one, and the loan denial letter states that the loan is denied based on insufficient cash, insufficient funds to close, and insufficient cash, unacceptable source of funds. That's all it states. Well, the loan denial letter, the loan contingency, the finance contingency clearly states that the buyer not having the cash to close is not a valid reason to protect them on the financing contingency. So in the notice to disperse the trust fund, to disperse the earnest money to the seller because the buyer defaulted, the lender sent a letter saying, this letter of loan denial issued by such and such lender initially was made based on an assumption rather than facts. This is coming from a lender. The denial department didn't realize you, meaning the buyer, were selling your home to pay for the new home as well as to pay for all debts listed in the loan application. This is 100% in error. Assets were never a problem. The new denial issued today is in fact correct. And it goes on. So a couple of things. Number one, if the buyer was making their contract contingent upon them selling or leasing their house first, that was not included in the contract. So that would not have worked. The second issue is that the loan denial letter still said that the initial letter still stated they had unacceptable source of funds or insufficient cash to close. This letter stating that they issued a denial based on an assumption rather than looking at the facts, really, really interesting. That was actually from an online lender and not from a local brick and mortar lender. We'll tell you that. Also, wanted to let you know that a buyer was getting a Georgia Dream down payment assistance program. They did not, however, make the contract subject to the buyer actually receiving those funds. So again, that does not satisfy the loan contingency terms of not having sufficient funds to close other than the loan. And then the third loan denial letter fail is another different amount. That the loan denial letter did not match the exhibit. So the exhibit was for an FHA loan, 96.5% of the purchase price. They did identify the lender. The buyer did terminate within the time frame. However, the loan denial letter that they sent, it does say mortgage loan, it doesn't say FHA, so not quite sure about that. The reason was inadequate collateral. Sale price on this property was $226,000 with a loan, they're getting a loan for 96.5% of that sale price. The loan denial letter, however, the loan amount on the loan denial letter had $304,486. So again, that buyer did not meet the terms of the financing contingency, did default on the contract. The holder sent the notice to disperse money to the seller as liquidated damages. The holder received a written objection stating that the lender had simply made a mistake. The loan denial letter, they were multitasking when they wrote the loan denial letter. That loan denial letter, the amount was incorrect. They sent in their objection to the holder, the lender sent the corrected, revised loan denial letter, which the amount of the loan on the loan denial letter did match the FHA loan, 96.5% of the sale price, with the mortgage insurance premium financed into the loan. However, the issue is they did not send that loan denial letter within the proper time frame. So the buyer terminated within the time frame that had been negotiated between the buyer and the seller on the exhibit, but that corrected, revised loan contingency exhibit was not forwarded to the seller or the listing agent within the 7 days per GAR. It would have to have been simultaneously in the RE forms within the proper time frame. This issue was discussed broker to broker prior to the termination, prior to the expiration of the financing contingency exhibit. But unfortunately, in this situation, the buyer still did not meet the terms of the financing contingency and therefore did default on the contract, because you have to terminate within the time frame, prove it, and that loan denial letter must be sent within the time frame. And then that loan denial letter, there are definite specifications, requirements regarding what the loan may be denied upon, the reasons. So both listing agents and selling agents, y'all need to be very careful with the buyers when they are working with a lender, and make sure that everything does match the contract and does match the terms that the buyer and the seller have agreed upon for these contingencies. Thank you so much for watching. Again, Dana Sparks, broker of Maximum One Greater Atlanta Realtors, satisfying your needs with service, innovation, and education.